Payroll fraud is typically committed by the person in charge of payroll. Here are some common ways to defraud your business via payroll. The dishonest employee simply adds a fake employee. This could be an employee with their maiden name or another name they have not revealed to you. They then just pocket that employee's salary. They could also add the information of a friend, family member, or accomplice and split the money. Updating or modifying an employee's pay in a way that is not legitimate. This includes increasing salary, authorizing overtime, compensating for sick days that were never taken, or adding in extra sick days or vacation time. This is typically done to their personal account, but can also be done to the account of a coworker who is their accomplice. Next, failing to delete a terminated employee from the system or adding back a terminated employee could also be an indication of payroll fraud. The terminated employee might still be receiving pay or benefits and splitting the money with the payroll person. Or payroll may have switched the terminated employee's payment info to their own or that of an accomplice. Manipulating tax withholdings is a very popular way to commit fraud, since most owners just check total salaries and not withholdings, preferring to let their payroll or accounting people deal with that. A payroll person could just adjust their withholdings and enjoy a substantially higher salary while you slowly build up back taxes with the IRS. Prevention starts by requiring manual forms to be submitted for adding an employee, modifying sick or vacation time, or deleting an employee. Require prior authorization from someone higher up to perform any of these actions. Payroll should always be reviewed manually by you to make sure it is fair and reasonable. Compare this period's pay to past periods' pay for each employee and check for consistency. There's software to help you do this. Only after this review should you allow final checks to be printed. Whether this is done in-house or by a payroll provider, a separate person other than the one in charge of payroll should review the final package of checks. That individual should check the package for names, earnings, hours worked, terminated employees, tax withholdings, and positive adjustments. Spend special time reviewing the checks of people who have access to payroll, which are usually payroll, accounting, and IT. Lastly, payroll should always be kept in a separate bank account to limit losses if, despite everything, an employee manages to raid this account.